we joined SaaStock a little while ago and are part of their founder circles. It's been absolutely brilliant for us. We first came into it to further our community, our reach, our network, and to learn from some of the world-class speakers that SaaStock has come and speak. And I have to say, it has been absolutely superb for us.
Welcome to the SaaS Revolution Show. It's a pleasure to be joined today by Rajesh Jain, who is the founder of Netcore Cloud. Welcome, Rajesh.
Thank you very much, Alex. Great to be on your show.
Yeah, great to have you on the podcast. When I think it was your colleague sort of reached out, but you know, I'd seen a little bit of content from you sort of prior to that, so it was a timely reach out. And when I heard and read the content that you'd been bootstrapping what is a Proficorn to 100 million ARR, I thought, okay, we've got to get you on and really kind of figure out how you've done this. So very excited to get into this. So I guess to start, before we get into the meat of it, Rajesh, tell us a little bit about yourself and, to the audience, who is Rajesh Jain?
So I'm a serial tech entrepreneur. I started in the Web 1 world. I'm based in Mumbai, but I started in the Web 1 world. I set up India's first internet portals in 95. So that was just around the time Yahoo and eBay launched. It was a set of portals for Indians globally. And I sold that company in late 1999 for $100 million. That was also bootstrapped. We had no investors. So it was another Proficorn, the first Proficorn of my life. Netcore is the second one. And so after that, there's been Netcore. In between, I spent about 7 or 8 odd years working on the periphery of Indian politics as what I call a prosperity entrepreneur. So a bunch of diverse experiences. We can talk about them as we go forward.
Very cool. Thanks for sharing that. And so Netcore Cloud is the second, Proficorn, second sort of business. Well, and this one, the first one sold for 100 million. This one is at 100 million sort of plus in revenue.
Yeah.
So if you ever exited, would be likely sold for a lot more than 100. Tell us about, so after that brief stint in the periphery of politics, why you decided to leave politics, I guess, and found Netcore Cloud and do this all over again.
Okay, so my Netcore was started 25 years ago in 97. My political stint came between 2000 and roughly 11 to 2018.
Okay.
So it was sort of in between the Netcore journey. And I decided to quit the political part. I was working on the periphery, so I was not on the mainstream stuff, but my objective was how can we transform India? And I realized that it's going to take a lot more than just making a few videos and writing a bunch of articles with some interesting ideas to do that. So I said maybe that's a journey I can continue later in life. And Netcore was growing quite rapidly, and I said that let's get back into Netcore, let's get back into the tech world, and see how I can help in Netcore's journey going forward. So sort of 7-8 years in the beginning, and I professionalized the Netcore management. I brought in a CEO, and that's sort of when I spent a little bit of extra time on the political side, and then back to Netcore in 2019.
Gotcha. And then in terms of, and thanks for clarifying that, the like founding Netcore, what's the story there? How did you go about founding Netcore?
So in a way, if I look at Netcore, we've had sort of 2 broad lives. The first 10 odd years are when I was running the business, and we really didn't grow. So I'd started Netcore just before I sold my previous company, the Portals India World. We were doing Linux-based mail servers for enterprises in India. And while we were about at $200,000, we didn't grow much. We stayed that way for almost probably 8 or 9 years. We tried a lot of things. So every year I would come up with new ideas. We built the world's first block search engine, an RSS, IMAP aggregator, thin clients, thick servers. But My problem was I could not commercialize any of those ideas. And so that was the sort of first 10-year journey of Netcore. And then I professionalized the management. I brought in a COO and then a CEO. And that really began Netcore's growth starting 2007. We started with enterprise SMS services, a bit like what Cinch and Twilio do today. And then we started with emailing for enterprises, so email marketing, email platform for enterprises. We started that in about 2008-9. So that was like what SendGrid offers or came up with. So those were the early products. So that's why Netcore had the first part where it was the Linux servers, and then we really started on our customer engagement, customer experience journey after that.
Awesome. And so in terms of what Netcore Cloud is today, it's a customer experience platform. And how would you describe in terms of if you're a SaaS company that's listening, or like who's it for? Who's the ICP? Tell us a little bit more about that.
So our ideal customer is any B2C company, a mid to large sized B2C company. We don't do much for, we're not very good with dealing with SMBs. So it's a full stack platform. So if you think of it, there's the communications layer at the bottom. So it's omni-channel. So we can do SMS, email, push notifications, WhatsApp, and all other push channels that enterprises want. And then we have a full marketing automation stack above that. So that's what companies like Braze and Iterable offer in the US. So we have essentially the journey orchestration, the automation part, the analytics, the customer experience piece, which we did through an acquisition. So nudges inside of apps, personalization on the website. So full customer engagement and experience. So in short, it's essentially a AI-powered omni-channel customer communications and engagement. So a bit of CPaaS and a lot of MarTech comes into play. And then, of course, we did a recent acquisition of Unboxed, which expanded us into the search space, search and recommendations. So on-site search. So all our customers are B2C companies, mainly e-commerce companies, retailers, BFSI, banking, finance companies, telecom companies, media companies, anyone with a very large customer base.
Gotcha. And these are global customers. Where would you say the majority of the customers sit?
So majority of our customers, of course, still continue to be in India. We expanded into Southeast Asia about 6 years ago. And we've had very good success in Southeast Asia and then Middle East and Africa in the last 4 years. And a couple of years ago, we started our expansion in US and a year ago in Europe. So that's been our journey from India to other emerging markets and then to the developed markets. So US and Europe, we primarily do the email and the automation piece. We don't do SMS. And Unboxed, the company which we acquired a few months ago, they are very strong in US and the developed markets. So together today, we have a good sized business in the US between Netcore and Unboxed.
So a good segue into like just giving us a little bit more visibility or insights into the data around the company or some metrics. So we mentioned that it's north of 100 million, or you're doing north of 100 million. We know you're 25 years old as a business. How many people do you employ? We also know that you're bootstrapped. What other metrics could you share that could be of interest?
Yeah. So we are about 100 million in ARR right now. About 10 million comes from Unboxed. The other 90 million is from Netcore. And Netcore's revenues are split into two parts. There is what we call the platform business. So that's email, automation, etc. that we do globally. And there's a second part, which is SMS, which we only do in India. So SMS is low margin because bulk of the money gets paid out to the telcos, the operators. The platform business is, of course, the high margin business. But all of this is good recurring revenue that's there. We are about 900 people between Netcore and Unboxed. Of course, a lot of them are in India, but we do have now significant presence in outside of India in emerging markets, like I said, Southeast Asia, Middle East, US and Europe. And I do believe that the US and Europe presence is going to grow significantly as we go forward.
How many times, just a thought coming to my head, but how many times have you been approached by VCs that want to give you money? Can you think of a number there?
So I'd say that in the last 10 odd years, because maybe that's when we had a little bit of growth and scale, we probably have had about 6 or 7 conversations at different points of time with VCs. We had also tried to do a PE fundraise a few years ago. I think my problem is, and I joke with my colleagues, that most conversations tend to be a little short because in the first meeting itself, I tend to tell them my valuation expectation. And that then makes it very difficult in most cases, because it's I let them know what I want, and then I tell them that, look, if it's okay, then we go forward. We won't find anything wrong with my company. And because we have been profitable, there is no desperation to raise any capital. So it's
Yep.
there. It's the good learnings through the years in these conversations. But yeah, we have not raised capital.
And this term, sort of Proficorn, is this some? I mean, I've only heard it over the last sort of month or so. Is this something that you've coined?
Yes, Alex. So a couple of years ago, everyone talks a lot about unicorns, etc. And I said, companies like us, no one wants to write about us in the media because we don't have VC investors. We are not blowing up a lot of capital. We're not continuously doing funding rounds. I said we need a name to describe our type of companies. So that's how I came up with Proficorn. So basically profitable, private, bootstrapped, and reasonably valued. Then I looked around, and there are quite a few Proficorns around. I mean, MailChimp was probably one of the largest
Yep.
Proficorns. They never raised external capital, sold to Intuit for over $10 billion. And there are lots of entrepreneurs. I think we deserve a separate category.
I think a little bit earlier, so you mentioned that you were at 200,000 ARR for some time, and then hired some professional management, into the business. So can you just remind me how long it took you from founding the company to get to 10 million ARR, and then really, let's say, 3 of the kind of the big things that you did to really kind of help move the dial and get Netcore to this milestone?
Till about 2005-06, we were still stuck at about $200,000 in revenue, and then sort of the 3 things which helped us grow from that to about a 10 million scale. I think the first one was professionalizing the management, replacing myself, getting in a COO and a CEO, which really meant that the products that we were building interesting things, but I couldn't commercialize them. But the team which came in then essentially took them to market. We stopped some of the B2C activities that we were doing, side activities in Netcore at that time. We said we'll only focus on enterprises. So the second sort of key decision was to focus on the communications layer. The internet was growing in India. Brands wanted the ability to reach out to their customers. So a focus on SMS and email helped us a lot, because both essentially are inherently profitable businesses. Communications layer, you can actually build pretty good businesses. It's sort of less investment than, say, the upper layers of the stack. And then that was the second thing that we did. Third was that we focused on profitability as an explicit goal. Every year we would track our profitability. We didn't have external capital, so there was no other way for us to essentially keep the business running besides other than being profitable. And that sort of helped a lot because it brought in the culture of profitable growth. And then just around when we reached the 10 million mark, I think the other interesting decision which we made, which has helped us really in the next journey going forward, was we said we've got to look at something beyond communications, beyond email and SMS, because those are commodity spaces. So the next thing that we did was we started looking up the stack, and that's where the MarTech layer sort of started coming in. And the MarTech stack is when we started building that out in 2014-15 timeframe.
And then from so you've got the professional management team or the leadership team in place. So from 10 million to 50 million, how did you ensure, or like, what was your role to kind of, help ensure that they kept performing and that they were the right people to get to 50 million? And did you have to replace anybody, through the stages?
So the 10 to 50 million journey essentially was largely driven by our current CEO, Kalpit, because our first two CEOs spent about 4 years and then sort of moved on. So 2007 till about 14, 15 were the first two CEOs, 4 years apiece. Kalpit, our current CEO, he's been Netcore's employee number one. So he's been with Netcore from day one. He knows all aspects of the business. Started as a very shy developer. And then I threw him into sales and all sorts of different things. And he's learned on the job, as it were, through the years. And the journey under Kalpit, the sort of 10 to 50 million, was, I think, driven by two things. We had the full stack. We started building out the full stack. The email and the MarTech layers were there. And the second thing which helped us was the fact that we expanded to other emerging markets. So we got teams in Southeast Asia, Middle East, and Africa, near markets. So markets with a lot of similarity to India. And that helped a lot because that showed us that the products that we had built for Indian customers, we could actually sell to customers outside of India. And we had sales teams there. We had the back-end engineering, support, etc. from India. And we realized that that's a model that can work. And that sort of helped us get to the 50 million mark because we expanded our TAM by going into these markets.
Makes a lot of sense. And bootstrap companies, they move at a slower velocity than venture-backed companies. And actually, right now, the times we're in at the moment, it's a very good thing. It's all about sustainable revenue growth, right, and not growth at all costs and hyper growth. And that has changed somewhat. I think after about 12 years of the kind of the growth of all costs sort of mantra. What was considered the appropriate velocity for Netcore? What were your like targets kind of year on year? We want to hit 30%, 40% year on year growth. What was it, and what was kind of implemented to ensure that it was met?
So, as we were growing, our basic idea was that, look, if we can grow about 20-25% year on year, that would be a good number to look at. And I think in most years, until recently, we used to do about 25% odd. In the last 4 or 5 years, the platform business, we said, 25 is too low. We need to look at much faster growth. And we accelerated the growth of the platform, the email and the marketing automation business. And that's last 5-year CAGR is 35%. So every year we basically increased the growth rate. So getting it up from 25, 30, 35 in the last year, we grew the platform business over 40%. And that's something which I hope we can sustain going forward. Especially now as we move into developed markets, the ability to ramp up is there. And we now also have Unboxed along with Netcore, so we can do a lot of cross-sell also going forward. So these were internal targets because we were not pressurized by external sort of investors, as it were. But I would look at benchmarking ourselves against others. And I know typically the growth rates expected are significantly higher. But the problem becomes that the burn, the cost of customer acquisition also becomes very high. And the one thing which I had learned early on in my life when I tried to go for higher growth in 2007-8 was that just as profits are addictive, losses also become habitual. And I was pretty clear that, look, I don't want to start burning cash because after that, it becomes very hard to cut the costs, cut the surplus, the fat that is there at some point of time, just in case you have a bad year. And as a lot of us did experience in the early months after COVID, And even in that period, Netcore, we did not lay off a single person. And that's, I think, I wrote about it on my blog, saying that that's the difference between unicorns and proficorns. Unicorns with investors fired people. We were hiring people.
And that's fantastic. And we're seeing, I mean, as I say, with the current economic climate, again, I think a lot of the venture-backed sort of companies, I saw one, I won't necessarily name it today, but I saw one that's laying off 30% of their staff. And likely it's a preemptive measure, right? Thinking about upcoming recessions that they need to kind of cut their burn, and therefore, the team that they've hired for 12 months time, that are already kind of in place, unfortunately are the ones that are going to be sacrificed. So yeah, it is a shame, but if you can do it another way and say build the sustainable business in the model that you're doing, then all credit to you and other entrepreneurs doing the same. What is your take in terms of the current market and what's happening and the talk around sustainable revenue growth, given that's the business that you've built? What are your views and maybe advice for SaaS companies that are kind of questioning what should we do, kind of in these times? And yeah, what advice can you give?
I think there are two trends which are there. Number one is that actually for SaaS companies, it's a much easier path to profitability than for say B2C companies, where there's a significantly higher spend. I mean, a good SaaS company will typically be operating at 70 to 80% gross margin. So I think a lot of times companies just tend to go overboard in a mad rush for customer acquisition. So I think the question you had asked in the beginning, I think having a good idea of your ideal customer profile, not overdoing the marketing spends, being cognizant of the fact that you want to be able to ensure that you land and expand customers, and not just sort of, your NRR, GRR, all those numbers need to be good. And I think SaaS companies, I think have if the founders basically just decide that they want to focus on profitable growth, I think it's much easier for them to do it. So that's the first thing. The second thing is that, and again, we had identified this a few years ago, is that there is a move towards full stack. That means end customers, especially mid-market enterprise customers, want fewer and fewer vendors. So that means acquisitions, consolidation is going to happen in the space. It's already happening. It means that you've got to stitch together products. You have to give integrated offerings to your customers, natively integrated, not just selling two separate packages together. So I think these are two critical things. I think the sort of the bit of a slowdown, and I don't think SaaS companies will be too affected. If you're in the right space, I don't think you're going to see a negative growth or anything. The growth rates may come down a little bit, but it's still an easier path to profitability. But I think what many SaaS companies are going to face is the question they'll have to ask themselves is, can I keep running this business standalone, or do I need to merge with either a peer or a larger player for survival? I think that's the key question which a lot of SaaS founders are going to have to tackle.
Yeah, no, definitely good advice there. Into obviously it's a challenging time, but for you over your career, specifically around sort of Netcore Cloud, what were some of the biggest challenges that you've had to overcome, as founder of the business?
So I think, I think founders, CEOs sort of face these questions. It's, I think what Jim Collins called it out very well. It's the tyranny of the or versus the genius of the and. So a lot of times, essentially, we are given false binaries. So you can be profitable or you can grow. You can't sort of do both. And we've proven that otherwise. For us, it's been a lot about the and. So I've always asked myself is that rather than just being caught into this or that, can we somehow manage to do both in a reasonable manner? For example, we are one of the few SaaS companies out of India which has built a very strong domestic presence. So most SaaS companies tend to just focus on the developed markets because that's where, of course, those markets are 10, 50 times bigger than, say, India and emerging markets. But I think it's helped us a lot because We have now got a very good customer base. India is growing. Southeast Asia is growing very rapidly. We've got large populations. Internet is very good out here in the last many years. And as incomes grow, I think spends are also growing. So the ability to have customers close to us sitting in India, where the engineers are, we are able to get a lot of feedback from them when we launch new products, rather than being geographically distant. Especially, I'm speaking more from the point of an Indian SaaS company. So that has, I think, been very helpful. I think this idea about point solutions versus the full stack is another sort of point, another thing which comes up, this breadth versus depth. In India, what happened to us, Alex, was that because a single market was not very, very deep, we had to necessarily go wide. And I think that helped us because that sort of forced us down the journey of building a full stack solution, which has now come very helpful because I think it's what I call MarTech 2.0. So the first generation of MarTech was just aggregating point solutions, So marketers were also experimenting. Now when they have it, when they come up for the upgrade cycles, they're saying, hey, do I really need 20 point solutions? Or can I consolidate that down into maybe 3 or 4 solutions or even one solution? So that starts to make a difference. I think the other point which I'll sort of bring in here is this short-term versus long-term mindset. Many times it's a focus on sort of the next funding round. If you have investors, it's about the next quarter or the next 2 quarters. And again, what I've tried to do is we've run this company, we've run Netcore as if we are publicly listed. So we have internal targets, we compare them with every quarter with what we had projected at the start of the year or the previous quarter. But I also keep a long-term view in mind. There is no desperation for any exit for anyone. We are 25% owned by employees. So there's a very large ESOP pool. So many employees are very vested in the growth of the company. And this Jim Collins sort of line about an enduring great company is what I keep telling my colleagues, that we have to build a company which is built to last. It's an institution in its own right. We would ideally not like to exit because we've done all the hard work. We've grown it from 0 to 100 million. And I think if we play our cards right, I think in the coming years, the next journey from 100 million to maybe 300, 500 million can be done by us. We've done all the grunt work.
To a billion. To a billion. Think bigger, a billion.
A billion, yes.
Yeah.
1 extra 0.
No, exactly. I mean, where you are, with 100 million ARR, fully bootstrapped, there's no urgency, no reason to sell, right? So right now, and as you
Absolutely.
say, building that enduring company. Yeah.
And in the space we are in, I keep telling my team, marketing is never going to go away. And all what we need to do is keep looking at innovations. Every brand needs to engage with its customers. Customers are becoming more and more digital. So what we now need to do is to look at innovations. I mean, for example, email, there's been hardly any change in the last 20 years except text becoming HTML. And most of the original email players have all got acquired. Founders are gone, and a lot of them are being run by CPaaS companies, so voice and SMS companies. And I said that's a great opportunity for us now to innovate. So what we call email 2.0. How do you think of interactive mails, living emails, two-way communications? So if we can keep thinking like this in every area that we are working on, the marketing is going to be core to every brand that we are working with. So there's no danger of obsolescence in what we are doing. Now it's up to us. It's the innovations that we can come up with. It's how we reach out to customers globally. So that's really the challenges that we have. It's not the sort of survival challenge that many other SaaS companies may face going forward.
No, definitely. And I want to talk a little bit about the acquisition. So at 85 million ARR, you acquired Unboxed. That was doing, or is doing 10 million ARR, and you guys paid 100 million to acquire the business. How involved were you in the M&A process, and what learnings can you share about this acquisition?
I was quite involved, of course, but I let my team, Kalpit, the CEO, and his colleagues make the call, because The one thing I've been very clear about, a slight detour, but I think it's important for founders who sometimes may step back and bring in a CEO. It's essentially that a company must have one leader. Just because I own 75% of the company does not make me that leader. The leader is the CEO, is Kalpit. Even if I have disagreements with him, I only voice them privately. I don't do it publicly. So it's one of our previous CEOs had this phrase, disagree and commit. That I may disagree, but I have to commit once the team decides. So Unboxed, in fact, was a great opportunity which came our way. We've been looking for acquisitions for the last few years. Because primarily there are two reasons for acquisitions, and Unboxed is the third acquisition in 3 years. The other two were much smaller. They were sort of tuck-in tech acquisitions to help us with the tech stack. And then once we integrated those, we said, if we have to build scale in the US market, it's going to be very hard for us to do it organically. So we are looking for a complementary product, a company which was selling into similar customers that we were selling in a space where there was no overlap. And Unboxed was sort of the perfect opportunity which came our way, where they had an on-site search. So like Amazon has fantastic search on its site. Many other retailers and e-commerce sites, their search is not that great. They typically use some open source or sort of inadequate search, and then it costs them money because the conversion rates fall if your results are not good. You may have the product in your catalog, but if it doesn't show up in the search results, no one's going to buy it. And Unboxed had solved that problem very well. They had 150 plus customers in the US and other developed markets. And so I think it helped us in three different ways. First one was it sort of gave us a good sized US presence with B2C customers. So it's we can now expand the relationship that we have with those customers with the Netcore suite of products, number one. So that's a cross sell that we can do there. Second is it gives us a good developed market revenue, and which is, I think, very important when we want to IPO in India in the next 12 months or so. Maybe 9 to 12 months is what the range we are looking at. So we don't just come across as an India-centric company because the TAM in India is limited, emerging markets also limited, but the US TAM is US, Europe, Australia are very large markets. So that's very important for a future growth perspective. And third is that because Unboxed had focused largely on the US markets, they didn't have much of a presence in India and emerging markets. So now what we are doing is we are taking that product and taking it to our customers in India and Southeast Asia. And we are getting a great response because the problems are identical. The problems are the same. And Unboxed has solved them in the US. We can solve it here. So we had three primary reasons for the acquisition. And I think it's been a great decision. Kalpit and the team, of course, made the call, and I fully supported them. I said, and it's a big decision for us. When you're spending 100 million of your own money, you have to be careful. There's no opportunity to make a mistake.
How long did the process take from when, and how did you reach out, or who reached out to Unboxed?
So it took about 5 months, the total process. So our strategy head, Nishant, who had joined us about a year ago, when he joined, he was also looking at M&A. M&A was an important area that we want to look at. So he had reached out to people he knew in the VC community and in the investor world. And Unboxed had raised 25 million capital. And they were looking for, the investors wanted to exit. And that's how the sort of process started. And there was no banker from our side. There was a banker from the Unboxed side. We handled it entirely internally under Nishant and his team. And things take a little time because every deal goes through its little ups and downs, the due diligence process, and everyone wants to be pretty sure. They had a lot of investors. So for us, it's much easier. It's a couple of people in a room can make the call, but when you have 5-6 investors, you got to make sure that everyone's happy with every comma in the agreement. So that took a little time.
Was 100 million the price that they were looking for? I mean, I think it's a good, 10x revenue. Had they asked for like 20x, or like, did you get them down a little bit?
Yeah, I mean, it was, I think, they had it was a competitive process. So that's how it was. And I think given the future opportunity that Unboxed is playing in, I think it's a reasonable valuation. The 100 million also includes a little bit of the investments that we are going to do going forward into the company. So it's a total investment. We call it an investment. I think given the fact that it's operating in the US to a large extent and with very good brand names, like the Children's Place and so on as customers, Advanced Auto Parts and so on across industries, I think it's a good deal for us. It expands the scope of what we are doing. It gives us a very good landing product in the US besides email that we have had. And now I think it's up to us and our ingenuity to make the most of the investment.
Definitely. Well, congrats on the deal, and obviously, becoming, well, you would have become a 100 million business without them, but they just kind of the M&A helped you get there a little bit quicker. And a couple of final sort of questions. So, if you could go back to when you founded Netcore Cloud, from what you know now, what advice would you give yourself?
I think two pieces of advice. One is I should have realized my own limitations and probably professionalized the management, got a CEO much earlier. I think we would not have lost 5-7 years of growth between probably 2000 and 2007. Number one. And the second, I think, so the sort of takeaway there, Alex, is that I think founders need to realize what they are good at and what they are not good at. Just because I'd had a previous success, I thought I was sort of God's gift to the company and I could do everything, and I was wrong. I think the second thing which I would have probably done differently is I think we should have expanded into the US much earlier than we did. I think we had the products. We were probably just not confident of ourselves. So I think in hindsight, that's probably a mistake. Could have built a much bigger business in the US. US is, in email, it's 100 times larger than India, for example. I mean, we have 75% of the market share in India, but that means nothing when it comes to the global share. So we had the products. I think the good thing is that we built a base, we built a good foundation in India, which is paying off very well as India is growing now. But I would have probably gone to the US maybe 3 or 4 years before we actually did.
And as you said, this is your second time round as a founder, and it's a long journey with Netcore Cloud.
Yeah.
25 years so far, and you want to build this enduring company, or you are building it. How do you look after yourself, as a founder, on your journey? What are you doing to kind of take care of yourself?
So first part is that money is not really an issue, because I had a very good exit in 99 when I sold my first business for $100 million. My needs are very simple. So I think if you keep your expenses low, then I don't think you have to ever worry in life. My wife and I have been working together for the last 30 years, most of the last 30 years, building out India World and Netcore. So a lot of our discussions tend to veer around Netcore. She runs HR in Netcore. And the position I am in right now, I think I'm not a very good manager of people. So it works out well because it gives me a lot of time to think. I love conversations with customers. I write a blog at rajeshjain.com, my name. And I write about new ideas in marketing. I present them to customers. So the early what are the next trends which are there in marketing? What are the innovations that we should look at? Because everyone else sort of gets caught up in the day-to-day. You've got to meet the weekly, monthly, quarterly targets and so on. But I have the luxury of chunky time to read and think and imagine the future. And that's what I love doing. And I read a lot, books, and what are the ideas that we can implement in Netcore. I used to read a lot of the books earlier also, but we are just too tiny, too small as a company to really follow some of the things in there. And I think now for us, the next big change is going to come hopefully as a public company. So preparing for that now, the conversations with bankers and investors, I think is going to start a fresh, different set of investors compared to say PEs or VCs that we've had conversations in the past. Yeah, I think, like I said, the good thing is that marketing, I think, is a great area. As Drucker said, a company just needs to do two things: marketing and innovation. We are in one half of that, and the other part, the innovation, is something which we have to bring to the table, and it's a great place to be.
Well, congrats on your success with Netcore, obviously the previous success as well, everything that you're doing. Amazing to be this Proficorn, to build this sustainable revenue business, to build this enduring business. So great to have you on the SaaS Revolution Show to share this with the SaaStock community. We really do appreciate it. So thank you very much, Rajesh Jain.
Thank you very much, Alex. It was a great conversation.
Where can people find you online, Rajesh?
So rajeshjain.com, my blog. That's the best way to reach out to me. There's an email ID. I don't have too much of a presence on social media because I like my chunky time. I like to think, and I write longer pieces. I write every day. I don't like the short tweets, etc. stuff. So I think just get to me on rajeshjain.com.
Great stuff. Well, once again, thanks for being on the SaaS Revolution Show, and we look forward to seeing more about Netcore Cloud and getting to that billion in revenue and first the IPO.
And a great target you've given me, Alex. I'll work towards that.
Yeah, there we go. I wouldn't give you a stretch goal. Good stuff. Thanks so much.
Thank you.